Hey guys, I'm London. I'm back with a video showcasing my full investment portfolio as a 17-year-old. These are investments I hold through my Fidelity brokerage, my taxable brokerage account, and today I'm just showing off my overall investments. So firstly, we have my portfolio value. I have $7,443 invested, with $300 of that being returns. As you can see here, I have multiple positions. These positions I all equally believe in, except the exception of IonQ, which is sort of a more speculative trade, but I'll get into all that later. But firstly, I have Google, which takes up 28% of my portfolio. And as you see here, we have gains of $435, up 26%, with an average price of $250. So the company has a $4 trillion market cap, and obviously we all know Google, we all know Alphabet. It is up in the 1 year, up 66.27%, up in the 1 year. And then as we have, Alphabet owns Google Search, it owns YouTube Ads, Android, Gemini, Google Cloud, Waymo, etc. Its Q3 financials were up $102.3 billion, so it was up 16% year over year. And then the earnings per share posted a 2.87 beat, significantly above the 2.40 it was. And it has a $35 billion net income, which is up 33%, which is great, and was also labeled the stock of 2025. So it has growing AI models, growing cloud. It grew its cloud 34%, and then the YouTube ad revenue doubled. So I believe Google will be a continuous buy. It has a lower PE ratio for its sector, and it is just generally a more stable investment through its diversified conglomerate of tech, so to speak, and it's not too over leveraged in the AI. Now with its AI model, with Gemini, it's becoming increasingly more powerful. It has rivaled ChatGPT. I remember earlier on in 2025, people were wondering over whether ChatGPT was going to disrupt Google or not, but it has not, and it has posted me significant returns. Next is United Health Group, ticker symbol UNH. They are down heavily in the 1 year, 34%, but this is a great value, great time to get in with a $301 billion market cap, a great dividend, a low PE ratio, and great Q3 financials. Well, not great, but it's growing. Again, from the Department of Justice investigation, the CEO assassination, we've seen better with this company, but the 2026 and 2027 outlook should be better. It has risen a little bit, especially with notable investors like Warren Buffett taking a stake in it. And we've seen pretty good growth from Q3, up 2% year over year, of $113 billion. They have a returning CEO. They pay a good dividend, a pretty great dividend if you're into dividend investing. They are in the healthcare sector, but most metrics are a little stable, as opposed to when the 2021, 2020, when this was a more stable company. It's just that they're going through headwinds. But ultimately, I believe this company is a little too big to fail, simply because of their business model and what they do with health insurance and with health care. I will stay in this. I believe a great price for this to be at is $330. That's a great entry price. But when it gets above 400, I will slowly trim my position until I'm fully out, because I do believe in tech more than I believe in healthcare, but it's still a great company to invest into. Now, the only issue with this is that it's margin compression, and then the incorrect payouts and the DOJ probe and the management shakeups, but I believe that will not define this company. Now next, we have Meta, which is a little bit of a questionable investment with their recent tax bill, whatnot. It affected their earnings per share, their tax bill of $15.93 billion. Their increased AI spending concerns, but I believe this is still a great buy. They're up 12% from last year. They were up way more, but again, you see that tax bill here heavily affected their returns. But I believe that should be shunned. I believe that should be looked away from, because they own Instagram, Facebook, WhatsApp, which are a major source of ad revenue to them. They own their speculative Realty Labs, which is sort of AI integrated, the Meta glasses, things like that. They're kind of like a social media / AI play. They have their own AI, Meta AI. Realty Labs posted a year over year 74% increase. So did their $51.24 billion in revenue, a 26% increase year over year. Their ad revenue, $50 billion of that $51 billion, a 26% year over year. But that tax bill ultimately did affect their earnings per share multiple. But I do still believe Meta is a great buy below 660, 670, depending on their company financials and their growth. Now next is Taiwan Semiconductors, ticker symbol TSM. I'm sure you've heard a lot about this. This is a great company. It has a growing market cap of now $2 trillion. It's just growing. A year ago, 58% gain on their share price. This is a great company. What they do is they're the largest contract chip maker for AI demand, for advanced AI related chips, etc. They sell to companies like Nvidia, Apple. They sell to Google. They sell to AMD. They sell to Qualcomm. They recently, their Q3 was great. They had stunted growth, however, due to what has been happening in the past few months with the Santa Claus rallies, with a lot of just news. But I believe this is still a great company. Their net income was up 39%. Again, the $33.1 billion, 30% increase in revenue year over year. They beat all of their metrics significantly. So there should be no reason for the stock not to pop going into 2026 and potentially even 2027 if the AI trade stays relevant. Even without the AI trade, the need for computerized chips, the need for chips is still growing. It's a growing demand center. Now, they have a growing market cap, like I mentioned. And the only downside with this company would be the macroeconomic circumstance. Now, they are building more foundries in the United States to kind of guide away from that, but they ultimately are not safe from China. Being a Taiwan-based company, they're not really safe from China. As we saw when Trump gets to tweeting about China, and then when the Chinese president, people get scared and they kind of sell out of this when they shouldn't, when it's still a great company. The core business model is great. Their core revenue is great. Everything is great about this company. Now next, I'm going to go down here to Netflix. Netflix has been in a rough spot these past few months. We've seen a decline of 13%. And then in the 3 months, we've seen somewhere from 30%. They recently had a 10-to-1 stock split. That doesn't affect much. It just means for every share owned, back then when the share price was above $1,000, they give you 10 shares of it, which still equals out. They have a pretty big market cap of $397 billion. They are a subscription-based streaming company. Again, they play movies for you, and they're driven by ads and then their plans, their standard plan or their premium plans. They get a lot of income generated from that. Their Q3 revenue was $151 billion, up 17% year over year. But that $619 million Brazil tax charge did affect their income, the amount of money they got. Now, just like Meta, the core business proceeds remain healthy of this company. This company is in a great financial position, just with those one-time tax bills and then the pending $82 billion Warner Brother Studios deals and rivaling Paramount. I believe that this really does not play much. I believe if they do acquire Warner Brothers Studios, we will see a significant pop. I don't really believe the debt situation will be bad. They have the market cap and the financials to back it. But this is ultimately just a dead money stock. But the core business proceeds do remain healthy. But it is just a dead money stock because if things don't really fall through with the deal, I believe we'll see a small decline in the share price. But again, it will recover because it's a great company. Now they're up 5.11% year over year. Again, because of that all-time high decrease, they've seen significant decreases in their share price. Now, lastly, I wish to go over a more speculative position in my portfolio called IonQ, which deals in quantum computing. Now, quantum computing is essentially making computers like better. It augments computers. It does more things for them. It allows computers to do more. Now, IonQ is more speculative because in 2030, we are predicted to have a quantum computing boost, but they're trying to capitalize on that now. Now, they are due for a lot of revenue through their QCast, through Amazon Bracket, Microsoft Azure Quantum, Google Cloud Marketplace. They have subscription-like revenue through their quantum computing services. But again, this is more of a speculative market now because there's really no backing behind what quantum computing can do and what they can't. Now, Q3, their financials are a little rough. They posted a 222% year-over-year gain of $39.9 million, but ultimately their net loss was $1.1 billion because of their expenses. Now, again, this is a speculative stock. They're up 11%, but you see here they went to $80, $70. That's my ideal sell range. I currently have a cost basis of $51.79. So anything that can garner me significant profit, I just like to swing trade this. I also like to swing trade something called Cypher, Iron, Nebius groups, more speculative companies that can go down, but normally when they go up, they shoot up quick. That is the quickest way to kind of turn a profit, although it's risky. Now, with an investor, you have to understand your risk management. I have more risk-tailored strategies, but ultimately the core of my portfolio, as you see here, are great companies as opposed to IonQ. Now, lastly is my cash position. I have $170 worth of cash. I'm kind of just waiting for a great buying price through Netflix, through Meta. If Meta dips below the 650 mark, I'm going to buy. Or maybe even if Google, I don't really see Google declining much, but if Google dips below $300, then I'll buy. Now, I'm just going to hold out on TSM, hold out on UNH, hold out on IonQ. But ultimately, I will commit some of this money towards Netflix, towards Meta in specific, if they decline down to a price that I'd like. But that's it for today's video. I hope you enjoyed the video and looking at my investment portfolio and the reason why I hold the things that I hold. And I hope you have a good day.